Welcome back. Well, the August industrial growth and the September inflation numbers released over the weekend were a double joy for the economy. Industrial growth was higher than expected and inflation was lower than estimated. Now, economists are now ruling out any further rate hikes from the Reserve Bank in the current fiscal. Lata joins us with more details. Lata, good morning. Take it away.
Well, the CPI number is most important because it came in at 3.77, that is almost 50 basis points below expectation. Our poll was running at 4.16. So you can imagine the undershooting in food, and even in core, it was not as bad as expected. So clearly the market now is not penciling any further rate hikes this fiscal. So not only was the Reserve Bank's policy a positive, actually, it now gets extrapolated for the next 6 months and there's no rate hike expected. So one would expect, therefore, that the bond yields would jump and maybe the yields would fall towards 7.9 levels. IIP, well, I called it a joy only because it came in better than expectations. Expectations were between 3 and 3.5. For that, a 4% plus did somewhat looked optically okay. Manufacturing was only 4.6. That was the biggest culprit, but electricity did well. Capital goods and consumer goods were both a very mediocre 5%. So IIP goods per se are not a cheer, but because the market largely expected it, I don't expect it to bring any fresh harm. And in any case, it's a very, very lagged number. This is for the month of July. So in any case, no one really gives much for this number.
Okay, all right. Thanks so much for that, Lata. Well, moving on then, we'll be watching out for the WPI numbers as well later today. The wholesale inflation is expected to rise on a month-on-month basis due to higher fuel prices. The core WPI is likely to moderate to around 4.6 to around 4.8% from the 5.1% reading that we got in the month of August. But getting to stock-specific action, then CSE, that'll be a stock in focus. Remember, the board has approved the demerger of the company, but with a bit of a twist. Earlier, it was supposed to be demerged into 4 entities. Now it'll be demerged into 3 entities. Anisha, what are brokerages making of this, and what's the change this time around?
Well, the brokerages are more or less happy given the fact that the overhang on the stock now goes away. Remember, this demerger was announced back in May 2017, and since then it's been getting delayed because they have not been able to get the WERC approval or the approval of the West Bengal Electricity Board in order to separate the generation as well as distribution business. And that's the reason they had to go on with this 3-way demerger and not the 4-way demerger that they announced earlier. But in terms of the details, this merger will remain effective from October 2017, and the record date for the demerger has been fixed at 31st October 2018. Now, in terms of the shareholding that the holders will get, the investors will get, each CSE shareholder will now receive 6 shares of the retail business, 2 shares of the BPO business, and they'll also get 5 lakh fully paid up preference shares of ₹100 each in the retail business of CSE. Now, this is more or less the mirror shareholding of what was announced earlier. The company is expecting that the demerger of the generation and the distribution business will happen soon, perhaps in the next 6 to 8 months. And when that demerger will happen, the ratio will exactly be the same as what was announced earlier. Now, most of the brokerages believe that the demerger of the generation business will happen soon. In fact, the Motilal Oswal brokerages say that the case for approval of PPA for power business remains strong because there has been a precedent earlier also set in that matter. However, they had to change their SOTB in the near term, given the fact that the 3-way demerger will result into a bit of higher cost of equity for the distribution business, and hence they had to cut down their target price by 10%. Still, the target price stands at around 1,077, which is a good 200 rupees higher than the current market price. IDFC also believes that this will lead to the value unlocking. It trades at an attractive valuation, and they have a target on the stock at around 1,184. And Citi also likes the fact that they have made progress on the demerger. They say that the listing is expected to happen of all these entities by December 18. Hence, they maintain the buy call on the stock with a target price of around 1,151. But Nigel, as you mentioned, it's a bit of a twist. Instead of the 4-way demerger, it's going ahead with a 3-way demerger. The skeptics might say that there might be an issue with the approval as far as WERC is concerned, but as far as the brokerages go, they are confident and they all have a target price of around 200 rupees higher than the current market price. All
right, Anisha, thanks so much for that. Remember, we had a good rally in Friday's trading session as well for the markets on the whole, and CSE was up close to around 6.5%.